We are joined by Paul McCulley, former PIMCO chief economist and senior fellow at Cornell University, and Sarah Bloom Raskin, former Federal Reserve governor and former Deputy Treasury Secretary. Good to see you both. Paul, watching this together, I mean, this is like watching how normal people watch sports games.
Exactly.
You were cheering and you were loud. Why did you think Powell did such a good job?
I think he had two essential messages that he wanted to communicate. One was that he really does want to get inflation to 2%, not near 2%, but 2% or higher, which is flashback to where he was in December, where he said basically no tightening unless 2% gets realized, and he pounded the table about that. So essentially the committee is pounding the table in sympathy with him back in December. So I think that was really important. It just changed a simple word in their statement from near 2% to 2%. And then the other thing he wanted to do was really for wonks like me, which is to walk through the details of exactly what they're doing with their balance sheet. And the key takeaway from that is that he really wants administered rates to be the point of the spear in implementing monetary policy. And he really wants to get out of day-to-day open market operations. But they can't get there to getting out until they get reserves back up. So essentially it was 2%, damn it, I'm going to get there. And the other was that he wants to get out of high velocity day-to-day operations by the New York Fed, and he really wants administered rates to carry the load.
Sarah, when he talks about repo operations receding, trying to remove unnecessary volatility, how much is he willing to tolerate, and what is an equity investor supposed to think about that? Is it a classic sort of sell in, not a sell in May signal, but a sell in April signal?
Right. So I think while there were tons of questions on the plans that the Fed has in terms of removing the massive accommodation that it has made since September, I mean, accommodation in the realm of $60 billion of Treasury bill purchases per month, which is really quite extraordinary. There is, of course, a concern that this can't or shouldn't go on forever. And so his signals that there will be some kind of tapering back of this accommodation, I think, is a signal that he wanted to send. He tried to keep his options open in terms of definite timing. And yet at the same time, I think he wants to signal to markets, and particularly to participants in the repo market, that this is going to happen, that he feels that this can't go on forever and that there's going to need to be some paring back.